So you want to buy a house. Is there any way you can work with these high interest rates and possibly get a lower payment? So today's show, Rhonda Johnson has joined us from Cornerstone Home Lending. She is the only certified mortgage planning specialist in the state of Alaska. And she has been doing this crazy business called the mortgage industry for how long, Rhonda?
Since 1983, so just had my 39th anniversary in the industry. And
Wow. So you've seen it all.
I've seen an awful lot of it, and I know you have too, because we've been working together an awful long time.
I've been doing this over 20 plus years. So
Yeah,
I started when rates were in the eights and nines.
yeah,
So when
yeah.
they're in the sixes, I'm like, So right now, the biggest struggle I'm hearing from buyers, because if you work with me and you hire me to help you sell your house, you know, I do these lovely things called mega open houses. So I'm blessed with getting a lot of different buyers in the door, buyers that are sometimes working with other agents, buyers that are paying cash, buyers that are just out, tire kicking.
Mhm.
And so one of the questions in the last 2 weeks has definitely been, well, how's your home buying process going? And a lot of them are, oh my gosh, I think we missed it. We could pay today X. Gosh, we know we can afford this today. We have our down payment saved. We have some closing costs saved, but oh, we want that payment down.
Yeah.
So, Rhonda, is there anything out there in that bag of tricks you have that would help a buyer, especially a first time home buyer,
Yeah.
get into a home that is a home that they know will work for their families, but at a more comfortable payment in today's interest rate market?
Yeah. Yeah, you're right. And I've been hearing that an awful lot too. So a couple of different scenarios that I've been seeing is that perhaps one of the parents quit their job during the last couple of years with the pandemic to homeschool their children. And now school is finally pretty much back open in person year round. And so they're ready to go back to work. But they've been living on one income, and that other job hasn't quite kicked in yet. But they don't want to wait a couple of years to buy a home, because who knows, we may be in 8 or 9% interest rates in a couple of years. So we have those families that know that their income is going to improve next year or the year after, and they really want to get into something with a little bit more of a comfort zone with on a one income right now. Or perhaps the other one I have is teachers that are going for higher degrees that will
Mhm.
then raise them up a step in their employment contracts with the school districts, and they know that next year they're going to have higher pay, but they really want to get into something now. So we have a strategy that we can work with for some folks like that. It's not for everybody, but it works for this kind of a family that knows that we've got additional income coming up in the future. And we call it our 2-1 temporary buy down. And
Hmm.
that's because we're going to reduce the rate for the first couple of years for you before it goes to the real rate for the remaining 28 years of the loan. And we can do this for 3 years, 2 years, or just even 1 year. The most common one right now today is the 2-1 temporary buy down. So what it basically means, Melissa, is that we buy down the interest rate by 2% for the first year, and then 1% for the second year, and then it goes to your normal note rate that you would be paying all along. And you know how your
Hmm.
payment is comprised of the principal and interest that pays
Mhm.
back your loan that you borrowed, but we're also going to include in your payment your homeowner's insurance and
Mhm.
your property taxes.
Mhm.
And then that way we take the taxes and insurance piece out and we put it in this little savings account we call an escrow account. And
Right.
every month it builds up, builds up, builds up. Then when the tax bill comes due, we reach in and write the check and pay your taxes for you. And we'll reach in, write the check and pay your insurance for you. And that way you don't have those two big bills every year to come up with. We take care of it all for you. And so this 2-1 buy down kind of works a little bit the same way, where
Hmm.
what we do is, let's say on a $300,000 loan, then, and if your rate would be at maybe 6.5% normally, but we're going to buy that down to 4.5% for you for one full year. And that's going to save you $376 a month on your payment for 12 months. So to pay for that, then we're going to have $4,511 put into this little savings account for you so that when you make your first payment of $1,520, principal and interest only, not including your taxes and insurance, then we're going to take $376 out of this little savings account and add it to your $1,520 payment so that you're really making your full payment. We've just kind of
Oh,
prepaid 12 months worth of your payment for you in advance, right at closing. And then the next year, it'll go up by that 1%. So you're still going to save almost $200 a month, $193. And that's going to cost us $2,300 to put in that savings account. So on closing day, whether it's the buyer or the seller,
mm,
they're going to put $6,800 in this savings account, and our homeowners, our families, are going to get to write a much smaller check, in this case, almost $400 for 12 months, and then almost $200 for 12 months. And we supplement that payment with this savings account that we established for you at closing day. And that way, that helps people get in affordably
mm.
now, and a little bit of the payment shock from going from rent to a mortgage payment eases a little bit and helps you kind of work into that regular payment over the next couple of years. It helps out for people that know they're going to have some kind of future income coming in that we just don't have today, and it protects them with today's rates so that they don't have to pay a higher rate should they be higher in a couple of years.
That
So
is
that's our
so smart because
2-1 strategy.
the other thing I'm looking at is when you buy a home, then you don't get to take advantage of the residential tax exemption, which exists in some of our what we call boroughs here in Alaska, but
Uh-huh.
you would get to use that the next year. So
Exactly.
again, that is something too that helps save money. So
Yep.
as that gets added, also we all know, and if you haven't watched our show before on what's the difference between renting and owning, the fact is when you're renting, you're paying 100% interest, as
Yeah.
Rhonda calls it,
Yes.
100% interest on your loan because you don't own anything. You're not getting anything back out of it. So again, when you go to file your taxes in 2023 for owning a property in 2022, you get to write off some of the interest and some of the different categories depending upon what the IRS tax laws are that year. But
Right.
again, you would be, so that first year, you would 15-20 would seem comfortable.
Right.
Mhm,
Right. Right. And so,
mhm.
we want to be very super clear, and this is all spelled out in your note, and it tells you exactly what these payments will go to. There's really no, secret to it. It's very eyes wide open. But it just helps kind of ease you into that. And we've been seeing an awful lot more of that where we're just getting back into this right now. Or maybe I started a business and we're pretty confident that we were very successful before the pandemic hit, and now we're going back up in our business,
Great.
building again. And so we feel really comfortable that in a couple of years, we'll be back on solid ground again, but we just need a little help right now to keep things affordable. So it has places for certain people, not everyone, but I want to make sure that people are aware of it for those people that it could really be a help to.
Well, and the thing too is that in Alaska, we are a very seasonal group of people, and we are very, very heavy on tourism.
Hmm.
And so consequently, I do know people that definitely what they look like, their income looked like over the last 2 years is like this, and now it's starting to go back up.
Correct.
So the blessing there is honestly, this makes sense. So if you're not currently working, if you've been out shopping and you wanted to buy a home, this is what your mortgage lender should be talking to you about. If
Yep.
you're not teaming up with a real estate agent and a mortgage loan officer that's looking at, okay, so they are 6.5% today. What is it you want? How do we get you there? That's what we need to be seeing. And when
Right.
I did mega open houses, I'm not hearing a lot of that. I'm
Yeah.
hearing just a lot of, we're done making offers. We're done with sellers asking for all this extra stuff. We are not afraid to pay for a house. We need a new house. We just don't know how much it's going to cost.
Right. Right.
And
Right.
because if you remember what, like 3 weeks ago, 4 weeks ago, before this crazy thing changed, you and I were talking about the fact that you were even going back through all your pre-quals and reaching out to all those buyers, letting them know what the rate increase was doing and how it was going to
Yep.
potentially affect their buying power.
Exactly. We had a lot of very heartfelt, hard conversations.
Mhm.
That Friday you qualified for 250,000 and Monday you qualify for 225,000. And by the end of that week it was about 200,000. So we lost about $50,000 of buying power. We're up a full 3% in rates from
Yeah.
where we were just a couple of months ago.
And
So
when I did my January mortgage or my market predictions for the year, based on all the data we had, rates were not going to go over 4.5% this year. So I think, again, no one has a crystal ball. So if you're out there shopping, there's no one that's trying to take away that opportunity for you to buy. And if you listen to Rhonda and you've watched our shows before, you know that she always says the average buyer buys how many homes in a lifetime, Rhonda?
7 to 11 real estate transactions in your life. And remember, this is oftentimes number one, right? And
Yes.
so if the rates happen in a couple, 2, 3 years to go back down, which historically they go up, they go down, they go up, they go down, then there's always the opportunity to refinance it. And this situation, this strategy with the buy down works on the FHAs, the VAs, the conventionals. So pretty much everything but HFC. Then
Perfect.
we can use this strategy for most types of financing that you're going to do. And then, like I said, it can either be funded for by the buyer or the seller.
Right.
And if a buyer has our down payment and our closing cost money, but we don't have this kind of extra money, then there's always the opportunity for a gift or again maybe some concessions from a seller to help out.
Right.
So it's not for everybody, but it's a strategy that'll work for certainly some.
So if you've been watching our shows, make sure you go back and you listen to a bit about that 5-part series on your credit score.
Yeah.
Super important in today's rising interest rate environment that you have the best credit score possible.
Yeah.
Our contact information is at the end of this show. We do answer our phones. We're real people. You can email us, call us, text us. We do get back with you. We're here to answer questions. We want the home buying process to be positive for you. If you're a first-time home buyer and you're sitting out there thinking, I missed the boat, you most likely didn't miss the boat. You just need a lender who's going to work with you on the numbers so that you're comfortable. Rhonda and I don't like to put people in houses where they're not comfortable. We want you to be super comfortable. And so that's why today, talking about this 2-1 temporary buy down, again, is the reason that you want to hire Rhonda, certified mortgage planning specialist, to take a peek at what you want to do for purchasing. So
Right.
follow me. And so Rhonda, we'll see you next week.
You got it. Have a great weekend, Melissa.
Okay, make sure you guys follow me on Melissa Harmel Realtor on all my social media sites, and make sure you like, subscribe, and hit that button so that you get to know when all of our new shows are going to be posted.